Good morning, everybody. I'm Dan Hussey with Zaner Ag Hedge, bringing you a strategy of the day update for December 9th, 2022. Remember, trading futures involves risk and is not suitable for all investors, and everything I talk about here today is just my own opinion and not a direct trade recommendation. But today we will be covering a pre-WASDE report update and outlook here for corn and soybeans. We're going to be looking at some of the bigger daily and intraday levels that could, act as support and resistance if we see some news whipsaw. This is, kind of the big grand finale report for 2022 before we get into some, in my opinion, a little bit more important reports into January, where we, see our quarterly grain stock estimates, our final numbers for the year, and really finalize the USDA's ability to make changes to the balance sheet. Because at that point, right, production is albeit done and accounted for. We can really hone in on what is left over and in global stockpiles, and then start, recalibrating for Brazilian and South American production, and of course, tapering off any of that Chinese and Asian demand that we'll continue to see, and typically and seasonally, between now and February. Okay, let's begin today. Let's go over just our WASDE numbers, I suppose. U.S. ending stocks here, trade estimates as of December 9th, 2022. Special thanks to Reuters for compiling the survey, and then Karen Braun from Reuters for posting it on Twitter. You can follow her at KANNBWX there in the corner. Pulled these from her feed. She always gives a great resource for up-to-date news information like this. And keeping all of the numbers and figures in one concise place for you, right? There's people out there that do this for a living, and Karen is fantastic at it. So, U.S. ending stocks expectations come in at 1.2 billion bushels. That is higher than the 1.18 billion from our November report. Trade estimates between that 1.82 on the low end. So every trade estimate is expecting us to stay at least consistent with last month's U.S. ending stock for corn, or even higher. Soybeans, we are seeing a little bit of a rise. There's the same difference, or the same idea, at 238 million bushels, slightly higher than the 220 from November, and even on the low end of trade estimates, that 220. So if we come in with a reduction against U.S. or the USDA's November number, it's obviously bullish against all trade expectations. It would beat every guess on the street, is my point. Not much in the way of wheat on this report. You can see only a 5 million bushel shift. I mean, I'm actually shocked that anyone really changed their wheat number on this report, but it is what it is. There you go. South American crop production is going to be a big focal shift after this report. We're getting out of and settling on the balance sheets for the U.S. Now we're starting to shift to how we're changing that global balance sheet, with adding that new season of crop from South America. Trade expectations for corn for Argentina come in at 0.54 million tons, with Brazil coming in at a whopping 126.45. Both those numbers, Brazil's is almost static with last month's report, but we are seeing that 1.5 million ton reduction from Argentina from the trade against November's report there. We're going to need to see that come to fruition, or maybe the global balance sheet for corn may not be as bearish or bullish as expected. On the bean side, we are looking at a reduction there in Argentina, again by about 1 million tons there. In soybeans, average trade expectation for 48.66 million tons there from Argentina, and 152.58 there for Brazil. So Brazil pretty static on their numbers, looking for some reductions in Argentina due to some weather and the dryness that we've been seeing there. World ending stocks due to be rather static, while we're shifting maybe some, on the balance sheets there out of South America. We are also adding, maybe some to the balance sheets in the U.S. Global trade, of course, being taken into account. The trade doesn't see much of a change here for global balance sheets across the board. So while we'll be looking at that world ending stock number, it's really a high-level number. We're going to get into the nitty-gritty of South American production and the fine-tune of the U.S. balance sheet for this report. We don't really care about the world ending stock number too much. We really care about what we're saying at the South American production level, right, and the U.S. ending stock level. So if you're looking to focus on anything on this report, watch for that U.S. ending stock number. watch for that the South American production. World ending stocks matters, of course, but it's not the focal point because of the proof is in the pudding, or the devil's in the details on this report, I guess you should say. Okay, so let's take a opening look at March corn, because that's what's up on my daily chart right now. March corn and GN soybeans have a stark contrast here of technicals, right? We're below all those big moving averages on the corn. We're above them on the beans. We've seen basically the corn to bean ratio being traded around here over the last couple of weeks, with corn effectively going the opposite range of opposite way of soybeans, with with the beans going higher and corn going down. Obviously, wheat came, I think, into play there too. Corn not sure to follow beans or wheat, but ultimately, I think that really depression we've seen in the wheat price has weighed on corn recently, but I don't think we've broken the back of the bulls or some key technical levels. And the moving averages that we are below, I'm optimistic we will retake. Now, with all that being said, that does mean that there are potential resistance above. We've seen the 18-day moving average being a great short-term trend indicator, that red line on this chart. We broke below it here back in November. We've stayed below it, tested it as resistance there at the end of November. December looks like we're coming up for a test of it at the 658 area. 100-day moving average is above that at 665, and the 55 and 200-day moving average are giving, unfortunately, a little bit of a bearish death cross right now around that 675 area. So those are some ample levels of resistance to the upside. There's, of course, 50% shorts, trendline resistance. We'll look at those in the other smaller time frame chart here in a minute. But as you can see, we come out of oversold territory for those daily RSI. We're now pushing up above the 50% area. It's anyone's ball game, is what RSI says. We can continue lower by banging it into resistance, or we could see a short covering rally because we're certainly not overbought and we're coming out of the oversold territory. So you take a step back on corn, just like soybeans, you see we're in a bigger range, right, that we've been in for several months. And we keep flirting around the $6.50 to $7 area as I see it on the chart. So we're coming out of the low end, where we would expect to see support. Now we're going to enter, in my opinion, into a period of price discovery higher. Today's news whipsaw could, of course, affect all that. We'll see how that changes. But taking a look now at the 4-hour chart here for March corn, going into the report today, higher highs and higher lows, for the first day here in several weeks. It's an outside A to the upside. That's great. Short-term resistance, though, 653 area, that old, support, or the area on mid-November where we found support before we broke below here into December. There's certainly a downward sloping kind of trend channel and trend line, I would say, at about the 660 area. I'm giving you kind of the bearish case first because I do think there's a big bull case to be made. The full 50% retracement, look for the 673 area as potential resistance. Okay, that's also the confluence of highs that we saw into the end of November. That's awesome. So there's some resistance there potentially, but the market did pull back. The 568 lows swing to the 711 highs was a 50% pullback into the 640 area, and it was also a test back into this old cluster of highs that we had, July through August here, around that 640 to 650 area. So we broke out of that area. We did 2 steps forward. We're making 1 step back. If we can push above 660 and beyond 675 or 645 to the upside, is probably in the works for target. To the downside in the short term, the bears want to try to break below 620, and that could open the door for that open test of $6, and certainly for that open gap down around 590 on this chart would be threatened. So whipsaw today, I actually think we're going to see a rather muted report, just my opinion, but certainly we could see a spike all the way as high as 670 here into the 50% of this retracement back to the highs of the month. I wouldn't be surprised to see lows of the month trade as well down around 635, just to kind of trade both sides of the book, and then generally speaking kind of end up somewhere around the 650 to 660 area into the end of the day. We'll see how that all plays out. January soybeans on our daily chart. To wrap up our day, we'll go over the daily chart here for soybeans and then the 4-hour, and leave everybody here with probably an hour and 40 minutes or so to till game time. All right, January soybeans, like I said, in stark contrast to the daily chart of the March corn, we are above all of our key moving averages. And those moving averages are really just the reversion to the mean. They're the area on the chart the market just keeps coming back to on both charts. So corn is trading back up towards them now. And I fear that soybeans may need to pull back for a test, of them as support, as we do trade a larger breakout. Doesn't mean we have to, though. Soybeans are much further in their consolidation pattern than corn. We have spent many more moons going up and down inside of this range, and we've traded both sides of the book fluently. In other words, we've tested resistance half a dozen times. We've tested support half a dozen times. The 1360 area, the 1480 area. We haven't broken above 15. We haven't broken really below 14 if you get down to it, but the 1350 area is the line in the sand currently. And we have open gaps above at 1538 and below at 1350. Bull markets don't close gaps, so I kind of think corn and beans will stay away from those levels to the downside. And we push higher if we're seeing the same seasonality we saw last year at this time. We are expecting a multi-dollar rally higher. It's not going to go in a straight line, but we are pressing into key resistance here into that $15 area. That is important. 200-day moving average is below us at 1449. The 18-day moving average at 1447. The 55-day has closed, the 100-day is moving back above. I guess the 55-day, had moved back above the 200-day, 100-day. We had seen a little bearish crossover, but I imagine we're going to see them cross back over here momentarily. Anyway, support in the near term, look for 1460 to 1450. I know that's a long ways down, but expect some serious volatility here in soybeans, just because that's the nature of what the beast, right? We are kind of, we see some upward sloping trend lines, but we are a bit overbought here in the near term. So I am worried that we're a little overbought, extended past some of these moving averages. We're hitting resistance. We haven't blown out per se. We may need to see a pullback in the near term, right, just to cool the jets a little bit. Short-term support, 1471 is the next in the series, micro or shorter, smallest, kind of 50% area I can find. Below that 1450, below that 1414, 1415. We could talk about a full 50% retracement all the way down around 1432. But I would anticipate maybe one of these other levels holding before that, just because we're so high up already. If we go all the way down to 1430 today, we're testing lows of the month, and that's, I don't know, that to me, taking a larger step back would suggest that maybe we're in this bigger range still. So, maybe don't think about or really commit too strongly below 1440, because we could open to 1380 just to be in the range we're in, right? So watch out today for the news whipsaw and volatility. The market may trade both sides of the book and do things just because it needs to cause pain, and it has nothing to do with the news itself. I wouldn't be surprised to see a rather muted news event, but look out for the support if we break down on that soybeans. Of course, we push through $15. That constitutes, the confirmation potentially of a breakout higher. Maybe today's news event and WASDE report is what is going to do it for us. If you've enjoyed today's market recap, join me every Thursday, at 1:30 p.m. Central for the strategy of the week recap, where we go in more detail into the fine tunes of the technicals that we've gone into on this chart, go into in many more markets, as well as presenting some actionable trading ideas and strategies that you can think about putting to work for yourself. I'm Dan Hussey from Zaner Ag Hedge. Sign up for links for our daily newsletter or that weekly webinar are in the comment section and information section of this video. Have a great day, everybody. Good luck with WASDE today. Have a great weekend, and we'll be back with you as price action develops. Take care, everyone.